What's up, everybody? Got some folks in here. What's up, Tom? Dan D. Talking about those convertible bonds. Yeah, it feels. I mean, I'm really curious what's going to happen now. I mean, it really did not. It did not look like we. Yeah, like there were just no real trades on this for the most of the first part of the day. First trade, I think, came in. There was one kind of early here. But these are now trading very much up. Closing at 132%, looks like. Very interesting. Yeah, I mean, if I had to guess what is happening, right? I think this is basically what did we talked maybe sort of heading into the end of last week, right? This idea of like a bunch of different factors kind of overlapping and compounding on each other to maybe drive this. So convertible bonds maybe a part of that too. Who knows? What's up, Ken? A lot to be excited about. Yeah, call flows were pretty nuts today. I have to say this is probably the biggest I've seen in terms of call flows since Roaring Kitty coming back last year. Pretty sure. Volume, I don't think is quite there. What was daily volume today? Are we doing things after hours? No, we're chilling. Chilling. What do we hit on volume? Oh, almost 30 million volume. So probably with after hours, we'll probably hit 30 million. 3303 close. I was not expecting that. I will say that. You all know me. I'm very I'm conservative when it comes to this stuff. And there's historically a lot of defense at 30. So was not anticipating the 33 close. I'll tell you what, Ken. Why don't I? If somebody wants to send me 200 million first, I'd be happy to lose it. But I'm gonna have to insist that somebody send me at least $200 million before I go and lose it on the stream. Yeah, yeah. Yeah, what's up, Swag? Yeah, man. Those covered calls not looking great. Not looking great. Yeah. Got some myself, right? That are just sitting there, in the red. Don't on the one hand, not a good feeling to see that happen, but on the other hand, shares are doing their thing. They're more than doing their thing. Pretty cool day. Yeah, really. If we go and just check out what's going on with option stuff, right? This is an insane amount of premium. Yeah, 87 million in positive and bullish premium here, 70 million in bearish, and then 15 in neutral premium. That's pretty crazy. That's pretty crazy. Yeah, I don't think we've had an options day like that since last summer. I don't even think anything we saw in November and December was like 100 over 150 million dropped on the options market in a day. Yeah, how about that? This is a pretty cool dying brick and mortar. Well, we got the sign, right? We got Market Watch telling us that now it was okay to, now it was okay to do. It's okay now, right? Guys, it's okay. We can invest in GameStop now. The people said it's okay for us to do it. Let me see. What was the tag on this one? Shares of they're riding the Bitcoin wave. Hey, did you guys know that that's what we were doing? Did you guys know that we were riding a Bitcoin wave? Because apparently that's what we're doing. It's not a meme this time. Shares of video game meme stock. But wait, oh they change. Oh yeah, see, it's not, guys. Guys, stop. Guys, no. This time, it's not a meme. See, Market Watch said it. So this time, it's not a meme, guys. Yeah, how about that? Adam, last time we had our live stream last Friday, right? And Adam was like, "Oh man, how awesome would it be if GameStop just started pumping during my during my coffee window?" There you go, man. You got your wish. You got your wish. That's a good question, Tom. Let's take a look. Actually, we can go check out over here. Like a whole lot of them, I think. Oh, like 3/4 of them. 3/4 of them. That's looking like. But did a bunch of stuff come on in the day? What about zero DT? How much zero DT volume we have? I don't know. I don't even know. Probably not a lot. Only 125 puts closed in the money. Do you believe that? Only 125 puts. Yeah, this actually looks a lot like. This was very interesting. This looked a lot like the November 8th to the 11th move. So let's see. Yeah, this. Bang bang right here. I think I'm trying to like figure out like, okay, how many things really came in today. So what I expect happened this week. So we got all of these puts, right? You notice we didn't get these today. We didn't get the out of the money puts. So they stopped halfway through the day yesterday. So these all came in throughout here, right? Okay. Then we had, Richard was talking a lot about this, right? He's got this framework of this T plus 33 trading days plus or minus a couple, right? So this was what, 3 can kicks from 1, 2, 3 right here. So this was 3 can kicks from these spikes and this low, with this low causing a problem, right? So this didn't pop, so we didn't get kind of a pressure valve release here on ETFs. So it got kicked out basically to yesterday. Right, we had a bunch of FTDs here on XRT, right? Well over 1 million. So is this possibly some of this being cleared out here? On top of this, right, bounce out to the weekly, right? So called this out earlier in the day. Oh man, look at that candle. Look at that green candle, man. That is a crazy weekly candle. That is a crazy weekly candle. That is the thickest Green candle, yeah, we had basically since this one way back. It's even bigger than that one, I think. What was the percentage on that? Low was 1070, high was 1745. Here low was 27, 69, 33, 21. So yeah, I guess it's identical, basically. Pretty close in size to this one we had right before this big run right here. That's our 8th green week in a row. Right now, it looks like the only thing we've got basically hemming us in right now is this historical resistance at like 35, where we had this double top here. But yeah, we got like early in the day, we got the weekly cross of the PMO. And a certain part of me wonders to what extent was basically what happened throughout the entire second half of today. Just algorithms going like, PMO cross, pull the trigger, and just buy options, right? Buy. It's exciting. It's exciting. Yeah. Close above 33. I mean, this was just unrelenting today. You know, Ultimator 2 with the call out here with gold. So apparently like bullish price action in the gold silver ratio like corresponds also for some reason to GameStop bullishness. Why ever that's happening, except that like silver might be swapped. I think it's something like silver is swapped with GameStop. So when you see the ratio like spread, silver is being shorted, something like that. Remember that whole silver squeeze back in the day? They tried to like get WSB people to like do a silver squeeze. Pepperidge Farm remembers. Yeah, what are we looking at here in terms of? Yeah, so that was a lot of options in the closing in the money. We did have some pretty big zero DT stuff. Oh, these are sold, but those are probably in the money. That was closed. These are probably in the money. So some profit taking. Short put closed. Yeah. Yeah. Probably. Oh no, that's for 613. Yeah. Is that going to be buying on Tuesday? Dog, I do not know. Yeah, just a heads up to everybody, right? We do have a market holiday on Monday. It is Memorial Day in the United States, so there is no trading on Monday. That's a good question. That's a good question. We do see right. We do. Oh, I'm hesitant to be like, oh, this is it. We're just gonna, yoink to the moon now. But we got a little bit of stirring on the Roaring Kitty front in a conspicuous way, right? Him unfollowing somebody, unpinning his video, deleting his bio. That's very conspicuous. Another thing somebody brought up to me today, right, is next week is the Bitcoin conference in Las Vegas all week. I actually brought this up, right? I mean, there's going to be a lot of stuff. So, keynote speakers here. The vice president's going to be there. Saylor is going to be there. Who else? Pretty sure Ramaswamy is going to be there. The little boy from Bulgaria. Could you imagine just like really doubling down on this, just like t-shirt and like little boy haircut? Despicable. Whatever though. He's a CEO and I'm just a guy with a laptop. So what do I know? Schiff is going to be there. Oh, wait, why is Schiff going to be there? This is ridiculous. He's always bearish. Why is he's they're just going to be like, all right, man, yeah, thanks for being the like false resistance to Bitcoin. Like here's like your free 10 Bitcoin or something. In any case, there are some rumors out there that Ryan Cohen. I wouldn't be surprised if he was in attendance. That he may use that as an opportunity to announce that he had entered into a position with GameStop. So very interesting. Yep. 1 a week. Perfect ending into a long weekend, indeed. What's up, my friend? A day indeed. Yeah, that was really... It just didn't stop, man. Like every time I checked in, I was like, oh, all right, still going up. Chilling out here. Really, like actually really big volume there. Some huge volume candles into the close. 45, we just started pouring in again. Pump up above 33. Yeah, I mean, I think, look, I'm still trying to make sense of what was going on with say some of those big short put positions earlier. I talked about these in the videos earlier this week, right? Essentially like how these are, I mean, pretty good trades if you're trying to go long the stock without buying the stock, right? You're hedged against the interest rate. GameStop itself is an interest rate hedge. The interest rate, like interest on the cash from your position, allows you to be hedged to GameStop's downside, hedged down to the cash floor. And if interest rate goes down, GameStop's going to go up. If GameStop's about to buy Bitcoin, you've got Bitcoin exposure, whatever's going down with treasuries. If that's not looking hot, very interesting here. Ooh, let's see that. I saw a couple spreads like that, right? So like there was a spread where somebody sold a bunch at 39 and then rolled them into, like, took the cash. It was a debit spread. Took the cash and rolled it into $36 calls. I mean, if we do more of what we did today, then I don't know, maybe we pump to 40. I'll get assigned on my calls, but let's see. Let's sort here by size. Oh, Nelly. Oh, yeah. These. Yeah, so this is multi-leg for next week. Yeah, so this is a debit spread. Yeah. You guys can see this, right? Yeah, you can see this. So yeah, this is a call debit spread. So yeah, this trade that's a huge position, man. That's massive. That's massive. Look at that. These candles here together are like 17,000, and it just makes, like, this is so huge. It just makes this look like nothing. That's 42,500 of them in a block. In a block. How is there even liquidity for that? What the hell? Yeah, and then sold an equivalent amount of 39s. So what was the fill here? 70. So picked up 3 million in premium and then put the 3 million into these. So I mean, these now picked up like 40%. So these are up 40%. So this guy's up 1.8 million on this part of the position, and is down. These are up 30%, so up like, no, wait, those are up like 40%. So like 1.2. So net, this guy's up like 600K on this trade right now. Yeah. Worst case, right? So like if this goes above 39, he just gets assigned at 39. And so, but he buys these shares at 36 plus the strike price. So he buys these shares at 37, essentially, and then sells them at 39.70 if he gets assigned. And his risk on the trade, if this goes out of the money, if 36 goes out of the money, is like 1.5 million, which is not a small amount of money, but I don't know. This is somebody slanging these things. I wonder if that did push us toward the end there, actually, Anton. I wouldn't be surprised if like, I don't know, if these are institutions throwing these around, if they were exercising to keep pushing the price up to make sure that 33 is closed in the money. Because options market maker would not. Yeah, see, this really defies like a lot of those typical weeks we're seeing with the options market maker, where we might expect them to deploy short liquidity or lending liquidity in order to prevent the price from going over these particular levels. There was nothing like that today. There was no attempt to adjust the price. This was just like, whoop, guess we're going to let it go. Anything we saw just kind of looked like, kind of ebb and flow stuff. Kind of cool down. We got a couple cool downs early, but it looked a lot more like a very messy VWAP. But there was this, right? I thought early on too. I thought like, oh, okay, they might try to do something here. But when we exploded up here, and then this like couldn't come down, it was just like, all right, game over. I think there was a genuine attempt to use the EU tariff thing today to short the price down, and then we just took the hell off. Ew. Good to hear, man. Yeah, those high V conditions, man. Just raking in that cash. Suspecting we can close above 30, but 33. Wow, calls printing, set up some profit taking on some, writing a lot still, game over hardly. Yeah. Yeah, we have to see, right? We have to see what's going down in terms of, yeah, I gotta like sit down and do out some of this can kick stuff. So you know what? We can go hop over, take a quick look at like some of Richard's charts here. And I think one of his recent retooling of his ETF chart, his ETF model, does a really good job showing a lot of this like oscillations in the overlap here. So definitely go check out his channel, right? Definitely go make sure he does a really great job breaking this down. Obviously, right, because he's like working on it actively all the time. But I think he does a really good job kind of visualizing this concept here. So what he has, right? So he has this T plus 33 deadline that he has kind of figured out, or this time frame. He has it here somewhere, actually. Explains how he derived the t plus 33. Forget exactly where he has it. Maybe he has it down in FAQs. Where does he have it? Yeah. ETF tailwind. Yeah. He did have a good chart in here. If you haven't basically like read through, he keeps adding stuff here. This is really good. Yeah, so this is the example. Right. So it's something like, can we zoom in on this? So I forget exactly the delineations of how this ends up working out, but there's like with the ETF kick, you've got T plus 6, I guess, from the whatever the inciting event is, right? So you've got T plus 6 before you actually get your 35-day like FTD. So it's something like you T plus 6 before you get the 35-day thing. You move that over to the ETF, you fail the ETF. The ETF, you've then got 35 calendar days. But then on the other side of that, you come back, and then the authorized participant, I think, has like another T plus 2 or something. So there's a way that these go back and forth between the authorized participant and who's actually putting in the creation order or the redemption order on over on the ETF. And so basically what Richard's settled on is something like it comes around to about T plus 33 trading days. So if you take 6 trading days, 35 calendar days, and then 2 trading days, and you put all that together, it roughly shakes out to about T plus 33 trading days. So one thing that does appear to be happening, if we go over to his ETF model here, and one thing that characterized this kind of early activity over in GameStop is there were multiple sort of cycles of ETF activity, of these sort of ETF can kicks that were overlapping, right? So there'd be something of a, let's see, I think the blue here is one. So you'd see something like this amount of volume would be can kicked. But before it was time, right, to clear this, there was another huge spike in ETF creation and redemption. So this was not able to be cleared. So this had to be kicked a second time on top of this volume being kicked already. And then yet another wave came in where it needed to be kicked. And so then you had 1, 2, 3, you had multiple iterations of this basically culminating all on top of one another all at the same time. And they were too big to actually be able to be cleared. And eventually all of this oscillation throughout all of 2019 into 2020 just kind of culminated to then when Ryan Cohen ended up adding in his buy orders, right? So in let's see, like August here, right? August, October, the like, where he started injecting in all of this, additional demand for shares on top of, say, I think these were like the can kick like share buybacks that the company had done. That eventually all of this stuff just kind of collapsed on top of each other, right? So all of these get bigger, 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 and then everything goes nuts here. And so basically all the way into the end of 2020, basically August of 2021, so this is July, somehow they figured out some way to kind of bundle all this up in swaps so that they could stop this, just keep this dynamic from happening again and again and again. And it still kind of happened, right? It still continued to happen. But at some point they were able to, move this out of the way. Okay. So this stuff happened again, and there'd be these overlaps, but they were smaller, and overall they were able to keep moving the stock down. But really interestingly here, right, as we get into what's going on much closer here, what we're looking at now is we can see that, right, these sort of discrete peaks and valleys, right, which are farther separated, we're not seeing as much, right? So number one, they're smaller, there's less creation, there's less redemption, which implies that they're successfully being able to clear these fails. However, as we start to move now, right, we move into here where we are now, we're getting more and more overlap again, right? So we're seeing these peaks overlap one another in here, and they're getting higher. So we're seeing swings, for example, in XRT, right? We've been looking at this. We've been looking at XRT, these different, right? Richard has this data also for us. This is, yeah, ETF, right? So we can see, for example, like these really huge swings in XRT. So going back to, I mean, he's talked about this a lot, so I won't rehash this to death. But right, we can see we get down, where are we here? Fourth. So something like this, right? Down to essentially a yearly low in terms of outstanding shares, gets created all the way up to a yearly high. This is a 3-year low up to a yearly high in XRT volume, outstanding. Gets redeemed all the way back down to 3.4, a little bit of creation, down to 1.75, which is a historic low. That's an all-time low in terms of the XRT outstanding. That's by the 30th. So this happens, right? We actually don't have, or that's the 1st of May. We have this day as a huge cat error day, over 1 billion cat errors on the 1st, same day that XRT's outstanding gets this low. We also have the 3rd and the 4th are big cat error days, or they start a big cat error run from the 7th to the 10th. We have 77 billion cat errors in this span. And then what happens? XRT goes all the way back up to 8.2 here by the 13th, 2 weeks ago. We got our first kind of big short put trades here on the 6th and the 7th. And then what happens? Now we're going back down again. So we can see, right, we've got huge, huge swings in the XRT outstanding. And, you know, Richard's chart up here about these, right, these can kicks can show how these different sort of internalized cycles, right, you can see right here, right, look at how much space there is between these. There's not a lot of traffic here. I mean, this is pretty big, and these are pretty big, and these are pretty big, but there's a lot of space. Not as much noise, say, is back here. Right? These are well spaced out. But now we're getting some pretty big kind of double, quadruple peaks. They're getting tighter together. The space in between these is not as large. It's getting very crowded. And what could be happening is we see some of this compounding. Right? We see this compounding while Ryan Cohen and company are moving the floor up, while the stock is being priced up by, you know, whatever's going on with repositioning. GameStop looks like it's being used now potentially with these short puts. GameStop looks like it potentially maybe being used as an interest rate hedge of all things, based on its performance with respect to rate changes. So yeah, just very interesting to see this. We may be seeing some of this, compound on one another. Now, it'll be interesting as well to see what Ryan Cohen ends up doing with this, right? Does he just let, is now the time? Does he just let the share price rip? Is the share price just allowed to rip now that, say, they're going to go and acquire Bitcoin or something like that? Then it can be explained, right? Then it's allowed to happen because it can be explained. Whereas, before they could say, oh, the valuation makes no sense, this thing should go down. But now that they, have Bitcoin, now it's allowed to, be irrationally overpriced or something like that. Not sure. What's up, Album? Ooh, Larry tweet, new Larry tweet. Let's see. I posted one. It's pretty cool. Let's see. What's Larry looking at here? Oh, nice, from Solzhenitsyn. Oh, guys, we have to. We have to read some Solzhenitsyn right now. Absolutely. If only there were evil people somewhere insidiously committing evil deeds, and it were necessary only to separate them from the rest of us and destroy them. But the line dividing good and evil cuts through the heart of every human being. And who is willing to destroy a piece of his own heart? During the life of any heart, this line keeps changing place. Sometimes it is squeezed one way by exuberant evil, and sometimes it shifts to allow enough space for good to flourish. One and the same human being is, at various ages, under various circumstances, a totally different human being. At times he is close to being a devil, at times to sainthood. But his name doesn't change, and to that name we ascribe the whole lot, good and evil. Yes. Yes, very good. Cryptic. But it does have squeeze in the name. Let's do a quick repost there. Worth thinking about. Gulag Archipelago is good. If you want to know what went down with with the Soviet Union, they just reinvented slavery. That's what they did to get that economy working. Yep. I like this. The quickest way to 1 million, start with 2. There you go. Well, dog, I hope you got a good premium on them. That's all I'm saying. Oh, nice. Yeah, do it. For sure. Nice. Oh, is that true? Very cool. Very cool. Highest weekly candle close since August 2022. Hey, that's all right, though. That's all right, man. Whatever. Profit's profit. Profit's profit. Turn that cash around. Sell a cash secured put. Right? I mean, if we just moon, right? If we just moon, just like sell cash secured puts or something. That's what you that's what you say. I know you don't want to not hold the moon tickets, but yeah, just sell cash secured puts. What we got here? Number 112 at 330 CC's call the way today to roll the rest. Still sitting pretty on long leaps. All right. Yeah, hey, you can go buy those, right? Yeah, nice. Yeah, it's only May, right? Feels like a year. I've been coming up on my anniversary of content every day for a year. So yeah, I think like last week was my 1 year anniversary of, I think it was my 1 year anniversary of being profitable month over month for a full year. So that was pretty cool. But coming up. Do I expect a huge spike after close? Not necessarily. Why does that happen? I think when that happens, if we get spikes after the close, I think that has to do with margin call stuff. Think if somebody's account blows up because of a pump into the close, they'll get margin called, and then they've got like an hour to get their shit together, and then they get liquidated. Well, cheers. Cheers, Ken. Hit the like button only if you like this. That's what I'll say. Oh, nice, man. Yeah. We were we were getting a little excited yesterday in the comments on the video. Indeed. Oh, I'm falling behind on comments. I'm like on a half-hour delay with what everybody's saying. They don't know what meme means. Yes, what's up, Hugh? Good to see you, man. Sorry about being a half-hour behind on the comments. Butthole watch. That's the first time I've heard it referred to as that, but good to know. That's what it's known as. What's up, Maxi? Gerd Folk. What's up? Tuesday come quickly. Yeah, come on, Tuesday. Fun out there in Germany land. If the deep in the money puts were to go out of the money, what, if any, pressure would that put on the price movement? If they were to go out of the money, let's see. So if let's assume in the first scenario the trader didn't hedge them. The trader is the trader is hedged by having cash only and hasn't been shorting. So they would have cash on their books. They'd have positive delta on their books by being short a put. The dealer would have negative delta and gamma on their book. So they would be hedging by buying shares in order to deliver them. There would probably be a bit, not a lot, but some resistance as they go out of the money. So the dealer, they're one delta, so they're one delta contracts. The dealer is buying or has already bought all of the shares to hedge that position, right? Ideally, if they're not playing it really risky. Ideally, so the dealer is already hedged for all of those contracts, 100 shares per. As those contracts go out of the money, their delta values are going down. So as the delta values go down, the dealer is going to sell some of the long stock that they have hedged in order to hedge those contracts. So that would put, as they're about to go out of the money, their gamma value is going to spike. So the point of most intense selling with respect to that long hedge would be at the strike price. So there'd be a bit of resistance at each strike, and then it would go through, and then the rate of delta de-hedging would decrease after that. So there'd be some slight resistance as those go out of the money until they become worthless. Yeah. Thing of beauty. Dandy says, I considered selling some higher price shares today and buying back in lower on a dip, but actually ended up buying more instead. Okay, I think the convertible is unwinding its unusual short hedge. Yeah, what would be happening at this point? Well, I mean, it may not be unwound so much as just fully hedged. Just like all of it's now fully hedged. Like it's delta maxed or something like that. So it's just the price now is just intrinsic value because it's over the strike price. So now what's being built into it? I mean, this doesn't work exactly like a call. It's kind of like a call. It's kind of like a 5-year call. So, but the delta value on it should be pretty high. So I mean, they're at this point they're probably just like, fully delta hedged on it. So it's not like, they don't have anything left to sell. Maybe something like that. That's one interpretation. I've tried to figure out exactly how the hedging works on these things. But what I think is that it's something like the point at which they are not profitable is the face value, right? So they can't arbitrage these very well because they're exposed to gamma. So they're exposed to the rate of change of delta. They're least profitable in the curve, the delta curve on these is convex, or the profitability on these is convex. So Mark Meldrin has a good video on breaking it down how this works for in the case of master or MicroStrategy. When gamma is highest is like the only point that they're going to be unprofitable in the trade. If it's really, really low, like if it's down near 20, they're like super profitable because of their short hedge. But as it goes in, right, so they're like hedging, they'll hedge more as it gets close, right? So they'll hedge more as it's about to get to that unprofitable point. So they either want it to be a decent amount below and sort of bounce around below that kind of strike price, or they want it on the other side of that and they want it bouncing up and down like this. That's how they can, really juice the volatility. But they don't want it to sit in the middle of that and bounce between like 29 and 31 or something, because they're based on, I guess, their gamma exposure. They're not profitable there. I have a vague understanding of exact break, because it's like I can't go out and trade this thing. So it's like I'm like bouncing back and forth like theories about how someone hypothetically would set this up. I can't see the Greeks on the convertible bond. Like options for me, it's easy for me to figure out and go like, oh, how do I model this? Because I can just go and I can just watch the values change and I can go look and say like, oh, okay, here's how this would work. Like I can see these change and I can hold on to these instruments and I can experience how these go up and down and back and forth and all that. Kind of difficult to do with the bond. But in any case, I think you're onto something there insofar as I'm not so sure that the bonds are being hedged in a particular way that's necessarily not conducive to bullish price action. Something like that. Sold 99% of my 2029C. Oh, nice. Nice, man. Good job. I don't know about that. Did he? I'm not a big, I'm not a market history. I know there was a silver squeeze at some point, but I don't know if Buffett did it. Oh, what's up, World Informer? It's a great week, man. Happy to hear from you. Tomorrow's a Tuesday album. That's right. It's all good, dude. It's all good, dude. There's literally so much money. There's so much money there, though. Like, so what? Just keep going, right? Just see how it changes. Try to model it. Use strategies. Use strategies where you can't not profit. If you're profiting on your trade, like the idea, okay, you're selling a covered call. Part of the idea of selling a covered call is like, yes, you're selling away like your right to infinite upside for a short period of time, but like you're walking away with a profit, right? No matter what situation. So great. Take the cash that you do have and now, roll it into cash secured puts or something, right? Something like that. Oh, scroll down a little bit too much here. Yeah, well, I mean, it's a part of the strategy. I mean, selling covered calls, right? You want to take advantage of high volatility. Part of it too is like, if you're playing the Delta game, right? We know that the company does offerings. We know that there's extensive shorting into swaps. How do you profit? How do you profit on the change in Delta? Because the thing about GameStop that makes it so appealing as a tradable stock in the market is it's the number one volatility product in the market. Okay, GameStop raised $1.5 billion this year, just this year, by marketing itself as a volatility product. That's really how the company's making money. You think about it. In the past year, GameStop has made $5.5 billion. It has been transferred $5.5 billion in cash by marketing itself as a volatility product, by being a volatility product. That is GameStop's business at this point. And maybe at some point it stops being a volatility product, but not right now. And it doesn't seem like the whole Bitcoin thing is not to decrease volatility. You don't pick up Bitcoin because you want to decrease volatility. So the thing is, it's like, all right, let's say, because like, okay, this is happening, right? And a lot of people have sold cover calls. They've been doing this. Maybe they get assigned, right? And the immediate thing is like, oh no, I got assigned on my shares. Like, I want to chase this. Oh, I want my shares back. No, right? Because maybe we go to the moon and right? Okay, but you could just sit on your profits for a bit, right? We know, look, in the past year, like how many times have we come back down? We've had big high volatility events, and we come back down to the net asset value floor, that 2x net asset value floor. So okay, let's say they do another offering, could be an at the market, could be convertible bond offering. Let's say we get, whenever that comes. Okay, let's say you get assigned. Let's say you get assigned at 30, or you get assigned at 35, or you get assigned at 40, whatever it is. And it shoots up to 40 or 50 or something. Okay, you miss out on some potential there. Fine. But like, why not just wait, right? Like, we already know they're not going to let it go to infinity, because that will break the entire market. So they're not going to let that happen. They're not going to let it go to 1,000, right? They're not going to let that happen. So like, okay, yes, on this run, like, okay, you walked out with only 70% profit or something like that, like, oh no, like, just wait, right? It'll come back. We'll get the offering, go down, re-enter there. Meanwhile, you could just sell cash secured puts. If the price is way up and volatility is nuts, go look 2, 3, 4, 5, who knows? Go 2-3 months out. Look at the IV, see how it's doing. Now you got a whole big pile. If your whole position gets assigned, now you got a whole big pile of cash in your account. IV's nuts, so puts are selling like, my God. Premium on those is going to be nuts, so sell those. Make sure it's a strike that you don't mind getting assigned at. Price comes back down, you can take some cash, you can put it in there, but until then, you just sell your puts. You can still trade the volatility. You don't have to have the shares, right? You want to think of cash as like collateral to short GameStop puts or something, right? That's still GameStop. You don't have to, you can have cash and it can be GameStop cash, So, just whatever happens. Just like, that's the way to go. This train's not stopping anytime soon. That's as far as I can tell. Yes, Ken, I remember when you sold $23 calls 2 weeks ago. I do remember this. Bet you're glad you didn't sell them this week, huh? Oh, cheers, Dingus Pingus. Glad you popped in, man. Good luck with work tonight. Huh, I don't know what this means. ASST potentially getting MT Gox 75K Bitcoin. Just translate that for me, and then I'll come back to it. Yeah, I'm the same way, Went. I'm the same way. I also didn't think so. That was also what I thought going into the end of the week too. I was also very cautious. But that's what I've been doing. I've been cautious. That's paid off a lot this year, being cautious like that. And yeah, it's just not what happened right now, but we'll see what happens. He just makes. I feel like he just makes stuff up to be that person. Yeah. Yeah, we'll have to see what happens. We'll have to see what happens. I mean, it definitely happened all 3 times last year. So, do we wait I mean, This is the thing, is some of that being priced in now? This is kind of what I was talking about earlier too. Is some of that being priced in now? Don't know, right? When we were thinking about the forward guidance back like 2 weeks ago, and I was like, oh, are we going to start to price up from the forward guidance from the Fed? Do we need to watch this? It does look like that's what those short puts are about, right? Those deep in the money short puts, I think. Although what can I make today? I think also has written some stuff up and thinks it may have to do with shorting, but I don't know. I think he may be onto something, right? And Ultimator sort of pointed this out too, that when they were coming in, the price was held down, like the price didn't go up. But I don't know if that's because they were put in to hold the price down, or if the price was held down while those were being purchased in order so that they could be set up. It really strikes me that they are a really excellent instrument in order to have as an interest rate hedge. An interest rate hedge, and yeah, I mean, if you have huge positions, if you have swaps that are going to take a hit because the interest rate goes down, then yeah, then having deep in the money short puts on GameStop is a pretty good bet, I think. So now I think we've seen now like 150 or 100 something million like 150 million of these puts are out there. Whoever opened those. Hey, yeah, hey, cheers to the 2021 shares, hey. Yeah. I think the first ones I ever bought were at pre-split 37. That was my first batch. Album remembers, actually. Yeah, so that would have been like $9-ish. But then I definitely bought more on the way up. So my average cost didn't stay at $9. Market makers making markets. Will all of this, like, of the stuff closing in the money, will it cause that to happen? Settlement, I mean, yeah, but they should already have the shares, right? So like that's why the price goes up here. Like that's why we see this stuff. So like the idea is the hedging is being done now. Like the reason this started, running up here, getting super volatile was like, here the 30s are worthless. Here they're worth something. Here you don't need any of the shares, but here you need all 100, right? So makes this kind of flip back and forth. But that's why this is happening, because like the market maker, the options market maker is hedging it. So the options market maker should have all the shares they need to deliver next week. They shouldn't have to buy more on Tuesday. They can if they need to. Maybe we do see some of that on Tuesday. Hard to say. Yeah. Premium on those is nuts, dude. Really, especially the out of the money stuff. Yeah. Good question. I was thinking about this too. I wanted to check recently. Not early in the day. They didn't really touch it. I think maybe in the pre-market period here. Maybe. Let's give a quick refresh. Yeah, they did not. Maybe a little bit. Like a couple 100,000 here early, but really no. Really no. How about GMEU? What was going on here? Oh, this one they did though, but this was pre-market. Somebody borrowed, basically reduced about 95% of the liquidity in this. And then it went back up. But yeah, somebody borrowed some stuff. A little bit of GMEU here. Whoa, what happened to the price of GMEU today? Did that like pump? Had to, right? Oh yeah, GMEU at 35.55. Hilarious. They opened this thing up now before, right when we're gonna have a run. Let's see. Oh boy. Yeah, that's quite the day there. GMU opened at like 29.50 and went up to 35 something. Very interesting. That's another good point. They might not care because of holiday deferral stuff. I don't know what the holiday deferral window is like this year for Memorial Day. I don't know how many days it is, how many days they get. What's up, Guido? All right, Thomas says we're seeing 80 next Friday, followed by notes. That'd be awesome for the company. Cool. Yeah, you can wait. No one says you have to sell cover calls. A lot of stuff coming up. Yeah, end of June. So definitely end of June. So there's rebalancing, but especially with XRT, there's reweighting. So 3 business days from the end of June is XRT reweighting. So they got to have all their stuff figured out by then, or bad. And if yeah, we'll have to see, right? Because if GME is like market cap is way higher. Actually, yeah, that's when the last. Wait, what was GameStop's market cap? It may not be that different actually from last June when it got reweighted because it was high. Share price was up in the 30s. Yeah, Larry stunned on X this afternoon in not a subtle way. We'll see. Yeah, so it was close to 100,000. So about 75% of our calls were in the money. Haven't seen that in a while. I think that's right. I think that's right. Because when did he do the? Yeah, because the timing of last year, it may not be 30 days exactly. Because last year he did. They did the offering on the 14th of May, and earnings was scheduled for the 11th. 11th. Scheduled for the 11th. So maybe it's 28 days, 4 weeks or something. That would make sense. Because he got it in, like he did it right away. He got it in right before the deadline. And then they moved up earnings so that he could do the offering on the 7th. Yeah. But I don't know if he's going to do, I don't know if they're doing more at the market stuff. Maybe. Why would you do that versus convertible bond? Yeah. Yeah. But it would probably take something crazy for him to do that. And the reason he did at the market offerings was because he could just pull the trigger on that. The other stuff he had, he couldn't do that at the drop of a hat, but he could do the offerings. So we'd have to go really crazy for that. And I don't know. Like, I don't want to say one way or another, right? We could just, I don't know. We could do something really big. Who knows what happens when Bitcoin gets announced? Don't know. But who knows? Try not to get euphoric, right? Make good decisions. Not confident with CSPs. Feel like that is a near the floor thing, but when it's mooning, do you sell those below a call wall instead of the floor, hoping to not get assigned? Okay, if you do. So right, I mean it's a bullish bet, right? But the farther you go out, right, like so you can go and like you can look at strikes. So like if we look here, like if we go to October, let's say you wouldn't mind having GameStop. I don't know if you sold October puts now at 35, you'd collect $800 per contract in premium. So you'd essentially you'd acquire GameStop at 27, right? So like especially with puts, you have to go out. And so you want to think about it as like you want to think about the premium as what your entry price is really going to be. So the farther you go out, the better the premium typically gets. And you say like, okay, if we moon, then awesome, I'm getting $800 a contract on my cash, right? Let's say if you get like your whole position assigned or something like that, and you're worried, and so you end up with a stack of cash. You don't know where to enter, but you're like, well, we're in the midst of this whole thing. But part of the reason that 35 there out in October is going to give you $8 a share, even though it's like almost like we're getting pretty close to that being out of the money. It's because IV is so high, right? So you're making a lot of premium on the volatility there. So you can sell those, and then you get assigned whatever. It's effectively like buying shares at 27. If we do another offering, pretty sure that's going to bring us up pretty close to 27. So what happens, right? Either you get assigned, either we do what's expected, or either we do what we did before. There's an offering, we get walked down into a swap or something, right? You get assigned, and then you're picking up GameStop essentially down at around 27, effectively. Essentially. Or we moon and you're collecting 800 per contract on that cash. So that's if you're selling 35s, 35 puts, that would be, you set 3,500 aside. That'd be pretty close to, that's more than 20% on your cash, right? Is that right? Yeah, that's 20 something percent. So in, let's see, it's June. So in 3-4 months, you're making 22% on your portfolio. Even if you, like, let's say it's your portfolio, your whole portfolio is cash, you get assigned, you exit GameStop at a profit, and you go ahead and sell those puts on your whole portfolio again because you want to go YOLO back into GameStop at whatever share price, and you don't get assigned. Instead, you walk away with 22% on your whole portfolio. So 5.5% per month. People hope for that for the whole year, and you collect 5.5 in a month. 22%. Most people would die to have 22% in a year. On their they would die to have that. It's crazy for most people. You're collecting that in 4 months, on top of already having just exited GameStop for a massive profit, right? Yeah. Cheers, Josh. Me too. I appreciate you guys. You know I appreciate you. Questions are great. Comments are great. Just being able to follow this saga to understand what's going on with this company. Just like having this as the most incredible induction into finance and economics and everything that's going on, and financial markets and the financial system of the whatever world we're living in. Just good to have some folks along for the ride, you know. Glad it's you guys. Hey, that's what the recording's for, man. I don't know. I'm just, I'm just ripping here. Let's see this Gamma Chat. Gamma Chat says next week 30 and 40 Cs are within a few thousand. A few thousand what? What do you read into this? Are they going to abandon the 30s? Small bump at 35. Oh, you mean like OI brackets? Yeah. I don't know. This is a highly unusual situation. We really did move up through that structure. I mean, I'll have to see how it ends up visualized over on, because we got so much new. This is the thing, is when we have these huge volume days, it like really reconfigures between days, like our landscape here. So much so that it's like, I mean, I can give this a refresh, but it doesn't have updated OI, right? So I have to wait a whole day to see, because this OI is just based on price and the OI pre-market, but we got a bunch of new contracts. And volume doesn't help us too much, because this 50,032, 51,032s were traded today. 51,000. And then if we look for next week, 35,032s were traded. 20K 30s, 35,000. I mean, 35 is, oh my God, 71,036s were traded next week. Of course, that's where we got those 45,000. But in addition to those 45,000, there were another 26,000 of those that were traded. OI at 36 is going to be crazy. 35 will be big. I mean, this is going to be, I don't know, man. I don't know. It just right. it's like predictability of what's going to happen, right? Makes sense, you know, up to a certain point. And then when stuff starts breaking down like this, it's like, up, you just along for the ride, you know, along for the ride. What stock price do I think? What's up, Kurt? What stock price do I think Cohen will do a stock offering at? He's not. I don't. He's not going to pick a price. He's going to pick volume. It's going to be volume, right? So, I mean, if we see 30 million is not high enough, we're going to need to see. What did he do? We're probably going to need to see like 100 million, a couple 100 million, somewhere in there. Yeah, 100 million. Let's go check out. What do we look at back here? No. This one. So what was volume like here? So he did the offering into this candle. 13th. Volume was 187 million. I mean, if we see that, maybe he'll do an at the market. Otherwise, I think he's just going to let it run. Because look, even back here, right? He had 48 million here on the 6th, and this was a 60% move, and he had 50 million volume, and he didn't do an offering. 60% move, 60 million volume, 50 million volume, didn't do an offering. So, like, I think not until we do this, not until we're doing 200 million, something like that. Same thing here, right? Yep. It's not going to do an offering until we get that. He did one back here, but this was with the expectation of the rate cut, which we got. And then when we got 60 million there, it cleared the offering. So you got that extra 400 million. Didn't do anything in here. Did the bonds back here. They were bought instantly, all of them. So I don't know why not do this, right? But maybe, like, I don't know. Do you do at the markets in an upcycle and then convertible bonds in a down? I don't know. I don't know, man. Like, we got to see. That's it. I really wish I had more insight. Like, I wish I had the clairvoyance to be able to say, but at the end of the day, your information's can only go so far. Your knowledge reaches limits. You can't possibly know everything there is to know about everything. You can't, have infinite amount of detail, infinite amount of knowledge about anything. And it just comes down to decision making. So, great quote from Guido. Cheers, everybody. Yeah, if they do another convertible notes thing, yeah, it'll look like what just happened, right? Because they'll short the bond, they'll short the stock as they buy the bonds again. But it won't go down as low. It'll go to the previous floor. Like, it'll go to 25 or something. It's not going to go to 20. What's up, Zach? Cheers, my friend. Nice cat, by the way. Hey, yeah, man, that can work for you as long as you got the IV there on your side. Oh, very interesting. Oh yeah, the emoji emoji tinfoil. Flag plus microphone emoji represents an announcement being made on Memorial Day. GME will announce that RK is joining the board. Maybe, man. I don't know. I don't know. Yeah, they might do it next week at the Bitcoin conference in Las Vegas. They might do it at earnings, which is probably going to be on June 10th. 10th, I think 10th. And then we have annual meeting on the 12th, shareholder meeting on the 12th. Yeah, we just had it up there for a little bit. It's pretty high. It's not. I don't think it's higher than what. Yeah, no, it's going up. 17%. That's extremely high. That's a credit card. It's very high. Yeah, all day. Up, 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 up. So they can announce the offerings whenever. The ones last year they did. So the first one they did, I think, after hours. The second one they did pre-market before Kitty's stream, for Roaring Kitty's stream. They did it pre-market. Surprise, they dropped earnings and did it pre-market. The one in the fall they did after hours with earnings, and the convertible notes they did after hours on the 26th. Yes, this is the fourth time since August 22nd that we have closed above 30 on the week. Just the fourth time. Yeah, this guy knows. Volatility. Volatility is the game. That's the game, right? That's the game. Because stocks go up, stocks go down. But the way that volatility is how you leverage. Well, it's like charging rent on your shares. That's essentially what it is, right? So like buying, maybe think about it this way for a real estate analogy, right? Buying shares is like buying a house. It's an investment. It can be an asset, but you basically just got to wait for the market to appraise it as more valuable than it's worth. So that you want to think about like the home price being like your delta. So like most people approach the stock market, they approach the same way they approach the real estate market, right? They're long delta. So they're long the stock market and they're long their houses. And their plans for investment are just to wait until the delta on their house goes up, right? That's what they're profiting. That's what they're going to profit off of. When you get into renting, commercial real estate, things like this, right? Suddenly you don't have to wait for the value of your property to go up, right? I mean, you can do things, and maybe you want to do that too. You would like the delta of your property to go up. You'd like to make some delta profit there, but you can make profit off of all this other stuff by renting it out, right? You want to think about options in a certain sense as being able to rent out the property that is your shares. That's at least how I think about it. So you can use options, for example, to amortize your position, right? In the same way that you can use rent to amortize your real estate investment, right? You can rent, and then as you rent, you stack up cash and you get your cash out of the property, and then you go put that into another property, right? But with shares, you can do that continuously. You can continue to roll profits back into the same asset, and then increasingly get your rents up and up and up and up and up by selling contracts and stuff like that. So that's a way to think about that. Let's see. Apparently, it's a company planning to merge with a company led by Vivek called Strive. Oh, I've heard something about Strive. They plan to be, oh yeah, Bitcoin Reserve, but they also may get. I don't know what MT Gox is though. Not sure. I have to read up on this. I'm not sure. It's a good question. I just don't know anything about it. What's up, Rothar? Welcome, man. We're talking about GameStop. That's what I like to talk about. But also like options and things. But GameStop options. So that's all I do. That's all I do. It's been my strategy for 1 year. Nothing but GameStop. It's really fun to tell people that. Like if you say that to people, they're like, I trade. They're like, oh, okay, like wait, but only GameStop. Ah, okay, right. But only GameStop. Only. Yeah, definitely, Julian. So why is there a price discrepancy between GMEU and GameStop? So let's pop over here. So GMEU is a 2x leverage of GameStop. So what they do, what their prospectus says, is they maintain 200% exposure to GameStop at all times. So 200% of the value of the fund is exposed to GameStop at all times. And they rebalance the fund at the close, right? So they will reposition every day at close. They will assess the value of the fund's assets relative to GameStop, and they will reposition themselves such that they constantly maintain 200% exposure to GameStop. So that will mean that they will reposition if GameStop goes up or if GameStop goes down. Anytime GameStop closes, they will reposition so that they have 200% exposure to GameStop at that point, at the close then. So that means that when they lose, right, when they take a loss, let's say GameStop goes down 5% in the day, they're going to go down 10%. Okay. When GameStop goes up 10%, they're going to go up 20%. And so you're going to get this kind of bigger oscillation going back and forth here. Now, what this means is what typically actually happens with these, because of the daily rebalancing on the close, typically over time you do see these ETFs decay because losses, like you're starting out typically with 2x leverage loss, and then most gains after that loss, so then you like kind of lock in the loss and then re-expose yourself 200% to the stock. So if you get runs where you get consistently, gain, like on top of it, and you're constantly repositioning and doubling down, like it's going to really exponentially start to move, which is why now, all of a sudden, right, a few days ago, GMEU was like 2 days ago, GMEU was below, like well below the price of GameStop. And now it's well above, right? Because we just had 2 really big days of GameStop bullishness in a row. So the fund benefited from this repositioning such that they maintained 200% exposure to the stock. But during these kind of a little bit up, a little bit down, a little bit up, a little bit down, when they do that, it tends to actually favor this kind of decay. But it can come back pretty quickly. On Wednesday, oh, good to know. That'll be interesting. I do remember there being a bunch of like euro swaps back when I was like looking over Metro Mullins data. There was like May didn't have a lot of swaps, but like there were a bunch of euro swaps for whatever reason. They were all in euros. So maybe there's something to that. Why worried, man? Why are you worried about a dilution? It's not like this is also why like everybody calls this dilution. They keep throwing the term dilution around. If the offering raises the value of the company at a rate that increases the apportioned absolute value per share, then it's not a dilutive offering. It is an accretive offering. Whoever has shares of the company does not have their value diluted because, okay, yes, their percentage of the company owned goes down, but immediately that smaller percentage is worth an absolute value more than the larger percentage they had before. So like usually like dilution is a problem when you do that over and over and over and over and over again, and everybody gets like cheated out of value. Pre-existing people, right, earlier people who bought into the company lose greater and greater percentages, like they lose value through their loss of equity in the company. Now that can be a good investment if you're like, okay, you can tolerate that if like later on you're like, yeah, but we're going to grow the company's going to grow. So by taking this money on, we can use this money to grow the company and you're going to have more value later. Even in these cases, like the company has been instantly providing more value to the share, right? Every single time the floor has risen on these. So like, okay, yeah, companies go ahead and they take these and they short the hell out of the company whenever these offerings happen. But they're not properly dilutive. But they're only dilutive in the sense of your relative percentage of the company. But instantly the absolute value of that percentage of the new percentage of the company that you own is higher because the amount of value that is instantly added exceeds is of a greater percentage of the total value of the company than the percentage of the company that was parted for in order to acquire that value. That's been true of every offering that's taken place last year. And again, volatility is the game. Trade the volatility. You want that, right? You want like how many people, right? Cover calls. Everybody gets upset. Oh no, cover calls. I'm getting assigned. Oh no, I'm going to miss the moon rocket. Whatever. Yes, come on. Convertible bond. Do convertible bond. Do the at the market. They're going to short it. You know they're going to use that as an excuse to short the stock. You got cash on the side. You've been stacking up cash all the way up, selling calls or doing whatever, having long calls. You got your cash pile. Go back. Sure. Go back. Okay. New floor. Into the new floor. Do whatever. There you go. Nothing to be worried about. That's pretty crazy. Pretty crazy our market cap is that high when we're only at like 32, 33 a share right now. Yeah, we brought this up a little earlier in the stream. Yeah, we could see. We could see. There's definitely some room. Yeah, there we go. I'm so far behind the comments. Yeah, Adam, for sure. Yeah, that's how you have to think about it. Right? That's how you have to think about it. That's the advantage of the cash secured put. So that's it, right? If you get assigned and you got your big stack of cash secured puts. Volatility is there for everybody, whether they own shares or not. Yeah. Have I ever lay awake at night staring at my ceiling and understanding just how much? Oh, that's very kind. This I don't typically think of that, but that's very kind of you to say that. Say hello to your very close friend and say thank you. Cheers, Colby Colbs. It is a good part of the Friday, isn't it? Oh, a nice little hangout. Let's see. Good luck. It's a little closer time frame than I typically like to trade longs, but we'll see. Oh, but you sold some yesterday, I see. Ooh. I never like to do long puts on GameStop. Don't like to do it. Right? Because listen, I've said this a number of times, but like the problem with long puts on GameStop is like GameStop's volatility goes up when the price goes up. If you are long a put, you are long volatility, but you are short price. So one of those things is not working with you when you do puts. Plus, we have these really huge moves up that can make that not nice, right? I don't like to do long puts on GameStop. I'll do short puts, short calls, long calls. Don't like to do long puts. I know there's ways to do it. Part of the way that you get away from that, you can make it a little easier on yourself, is if you do long puts deep in the money. That ends up kind of working like short shares at a slight leverage. I haven't done that. You can do that. That does mitigate the problem. It mitigates the IV problem, but you can still be wrong. And I don't want to be short GameStop. Like in general, my thesis on the company is bullish. So it's like it's only a matter of time, right? That's basically how I kind of see that there, right? It's like when we were back in the bearish phase from 2021 and 2024, it's like okay, maybe that would have worked better. But we're not there anymore. So I don't like to do it, but you do you, not financial advice. Cheers, my friend, of course. If I was swing trading, would I wait to sell after earnings? Swinging what? Shares? Um, Q1 is, I'll say this, Q1 is usually GameStop's weakest quarter. Usually. We usually go down after Q1 earnings report. We went down after Q1. We went down after Q2. We didn't after Q3, and we didn't after Q4. If I had to do it, I wouldn't. But I'm also not going to swing trade it into it. I'm only going to do, yeah, just hold shares and then have some short calls, and that's kind of cover calls, and that's kind of it. I'm a simple guy. I'm a man of simple tastes. Oh, cheers! Enjoy. Pizza Fridays is always good. Starred one here. Hey, thank you, Jet Geek. I appreciate that. Yeah, Richard is a homie. Thank you for your support, my friend. I think they need to get like 20 something million. I think it's 21 or 23 million or billion in order to be in the S&P 500. But there's some other criteria too. I think they may have met those. They need to be profitable every quarter. I think for 6 out of the last 8 quarters. They're getting close to that. But when that happens, that'll be the day. Oh, otherwise it's here. What's up, man? They did that just once, though. That was only in was that in the May one too? I know it was the June one. The June one was that. Maybe the May one was in the morning too. But I thought it was after hours. But the convertible bonds were definitely after hours, and the smaller one, the 20 million share offering, was after hours. Yeah, that would make sense. I mean, in the sense that like you price up into the new bracket, right? And it could be a way for him to sort of also signal to the bond people, like because part of the way he's going about this is also by you know not being direct, but by sending the proper signals to basically say like, here's the way we're going to structure this. Here's how you can profit from this. We know that you know how to profit from this in this particular way. You can profit from this in this particular way if you go ahead and hand over the cash for the company and let us do this thing. So he may use the sort of the auto convert and the strike price of the bonds as like hey, at this point, this is going to happen, right? When we get to this price, then this happens. When we get to this price, I'm going to do another offering, right? He could be telegraphing some of that stuff. Not sure. I do, but which videos? They're in the live streams. I'm trying to think of a particular one. Did we talk about that, gang? Did we talk about some of that last week? Did we talk about? I felt like we talked about like call wall cover calls. Check out the ones from the last like week or 2 weeks. I've been meaning to do this. I've been meaning to like, do like topical videos at some point. To like sit down. Like I spend so much time like trying to keep up with the day-to-day stuff on what goes on with GameStop. Like I would want, like I kind of want to just do like a video series where I just like lay out like, hey, here's what I do, here's how I understand this, like here are these concepts, here's what I do on a regular basis, and just have that, I don't know, as like a 5 or a 10-part video series or something like that, so that like you could just go watch that, um yeah, just like quick stuff, like because like it's the same thing with like some of the gamma concepts and whatnot. It's just like kind of good to get that out there. So you can just go refer to it as like a 10 video kind of a thing. That'd be helpful. Yeah, I think it was last week we talked about call wall cover calls. Although this week, if you did that, it didn't work. First time first time it hasn't. We'll see. I'm short 35s for June, so we'll see if I get we'll see if I get assigned. But it's fine if I do. Oh, you meant, oh, I see. Sorry, man. It's just like short 30, man. I got you. I saw that you adjusted it, but they're coming in. They come in. There's so many comments. A few minutes behind, but I get you. You're short 30, man. Dingus pingus. Sorry, man. I know. There's just so many comments. There's so many comments, which is great. We're having great participation. I think so. The thing at the top of the screen right now says we have 112 viewers on YouTube and 1,230 over on X. So I think that's anytime anybody goes across the page. And it's like, oh, cool, he's doing the live stream. And then that counts as one. So yeah, I think I saw that from Region as well. I think I think it will be in part because of the large part because of all the interest. But it's still going to be the weakest quarter. And it's not exactly clear that the reason that we dip is because of the earnings themselves, so much as because of the alignment of like swap related things, possibly like interest rate swaps or something. Like there's a repricing that happens then around earnings, something like that. Of the stock, no. I've an infinite. My hold period is infinite for GameStop. I would prefer to hold shares rather than hold cash, because I think there's, I from what I've seen as far as the whole GameShare stop away thing goes, that's pretty cool. Definitely want to hold on to that. But regardless, I will pursue one of my 2 volatility strategies, being targeting covered calls or cash secured puts, regardless of if I do get assigned or whatever. Some mix of all of that stuff is going to come into play until I see some sort of material, until I see some reason why this is going to change. Then, you know, it's been working pretty well for a year, so I know things change, but so far it does not look like things are changing. And the things that are changing maybe for the better. So, no, I do not have an exit point. Right. To quote Warren Kitty, what is an exit strategy? Hey, there you go. Yeah, last week's there's definitely some. Yeah, I'll see what I know that's about finding time to put them together, but I'll see if I can do something like that. Explain some of those core concepts. But cheers, man. Yeah, and enjoy cooking with your wife. I love cooking with my wife. Very good. All right, folks. That's it for me tonight. I'm going to go to sleep. But it was wonderful talking to you guys. Very exciting day. Very exciting to see what's going to happen next week. Really, I mean, we just got week after week after week, y'all. Next week's going to be big with the Bitcoin conference and whatever is the aftermath of this stuff. Week after that, we're going to start getting some of that appreciation from the earnings IV effect into the fake earnings date, which is on June 6th. Then we got real earnings and annual shareholder meeting the next year, the next week. It's going to be it's going to be a busy couple of weeks, eh? So, yeah. So we will, we'll see you guys next week. Enjoy the weekend. Enjoy Memorial Day. I'm definitely going to enjoy a day away from looking at screens and stuff on Monday. So should be a good time. But thanks all to all of you for participating, as always, for dropping comments throughout the week, questions, all the like. It's been great. Congratulations everybody for this week. Enjoy this particular phase, and we'll see you guys next week. So take care, everybody.